Good morning, Proponomics people, and welcome to my video for today, which is about an article that I posted on LinkedIn yesterday and some of the discussion that it generated. And it didn't go viral, don't get me wrong, but it got quite a lot of interaction and feedback, and there's some good comments, and I thought I'd just try and summarise them a little bit in this video here. So I'm going to be reading off the article a little bit, which is why you'll see my eyes flick off the screen now and again. But basically, starting with the article, I shared it from the Daily Telegraph, normally behind a paywall, but actually this one was free to air and it was quite good. And the headline was 160,000 rental properties disappear from the market as landlords sell up. Now, I found this a really interesting debate because on the other side of this debate, or well, it's fair to say these days that the Telegraph, pins its colours to the mast. It's a particularly right-wing newspaper. It is what it says it is. It's not ashamed of it at all. It's proud of it, if anything, and that's where it is. So, of course, it defends the landlord. You can honestly say that the Daily Telegraph calls for a stamp duty cut as often as the Daily Express tells us there's going to be some kind of extreme weather condition. It's an absolute go-to for them at the moment. We need less stamp duty because it's going to stimulate transactions or whatever. And it does do. It brings them forward, but it doesn't stimulate, new transactions that wouldn't otherwise happen, or there's certainly no evidence that it does anyway. But there we go. That's where they are generally on the political compass. But there's been this big debate, and for me, it's particularly obvious, ultimately. If we go back over the sort of wider timeline, we know we had George Osborne in number 11 Downing Street in 2015. He released this summer budget. At the time, to put it into context, buy-to-let was absolutely booming. In 2014, one in every £3 that was lent from all of the mortgage lenders captured by the FCA's data, one in every £3 was being used for buy-to-let. Now, bear in mind, quite often there are also people who do naughty things like say on their old residential mortgage or get consent to let and things like that. More than 1 in 3 new purchases were for rental stock. Now, that's not helpful, and ultimately it doesn't lead to a functioning housing market. It's too much. Now, that would reasonably allow us to assume, it's not exact in terms of the maths of it, but it would reasonably allow us to assume 1 in 3 new units coming online was for rental. In fact, it was probably more than that. But we'll see, because ultimately, rental units tend to be cheaper, and therefore you'd be buying more rental units for the same £1 million, would be maybe buying 5-6 rental units, whereas it might have been buying 3-4 owner-occupier properties. So just bear that in mind. It was probably more than 1 in 3. Too high. Now, what was the distribution at the time? It was heading towards about 19% into the private rental sector, 16% into the social sector, which had been and has been dwindling for a long time. Why? Well, Right to Buy takes units out, and it's very difficult to replace them, and they're not replaced at the sort of pace that they need to be replaced. That's where we are. And then where we fast forward to 2024, 36% owner-occupier, no mortgage. The biggest single ownership class there is in this country. You own your own home with no mortgage. A lot of people can't get their head around that, especially when they're trying to make arguments. Then 28% mortgaged, round about 40% loan to value, 42% the last bit of data that I saw, average LTV. Why so? Why is it 42? Well, fairly obvious. You can start at sort of 90, 95 and you tend down to 0 because that's how it tends to work. Obviously, you can go outside of the system and do clever things if you know what you're doing, but generally speaking, that's what people will do. So it makes sense that the average is somewhere between 40 and 45 because you've got the same sort of number of people on the ladder as you have overall time. So, of course, some of those mortgages are 24 years old or 29 years old or whatever, and they'll be at very, very low loans to value. So that's sort of roughly where we are. 1 in 3 was too high. You won't hear many landlords or investors say that, I'm sure, but I'm very happy to call it as I see it in the data. 1 in 3 was too high because 1 in 6 units-ish, at the time 1 in 6, nearly 1 in 5 were rental units. So this fostered this argument, which obviously had some basis in the data, that landlords were crowding out owner-occupiers. I didn't see it in 2014, round about where I was, but I've always specialised in bringing tired units back to life. Certainly back in those days, it was a very vanilla buy, refurbish, refinance, or whatever you want to call it these days, bringing units that weren't really habitable back into use, which made me feel quite good about things, to be honest with you. So I didn't see that I was crowding out first-time buyers in any way, and I couldn't get my head around it at the time. But now, obviously, on reflection, I can see it, and I can see something needed to be done. What dear old George did, though, in terms of Section 24, and then what we will look back on, in my opinion, as the hostile environment for landlords, because that's where we've been since 2015, has obviously changed things quite dramatically. And then it put all these ingredients into a cauldron. There was lots of moaning about the tax, and you could understand it, but it was never too bad. Why not? Because a lot of old landlords were stuck on, and when I say old, I don't mean in terms of their age, I mean in terms of how long they've been in the game. They can still be quite young, of course, on mortgages that they agreed before 2008, right? So they're on these pre-2008 mortgages. They were on base rate plus a couple of percent, 1.7%, 2.2%, numbers like that. So when base rate was 0.5, 0.75, not really a problem. Brexit came, dropped again, not really a problem. But then COVID came, dropped to 0.1. 0.1 plus a couple of percent margin, not really a problem. Moan about the tax, but it wasn't causing a problem. Put the base rate up to 5.25, and you've still got, and the FCA estimate about 1 million people on mortgages pre-08 that are in the investment sector, 1 million rental units. Suddenly they go up to, let's use 2% margin as our base case, 7.25%. Now, unless you're operating at a loan to value 50% or lower, maybe even lower, I've spoken to people in the southeast who can't operate profitably and loan to values of 38% with the base rate where it is, thanks to the mortgages that they've got. That's where they are, ultimately. So what happens? They have to sell some of those properties. They can't re-gear them to today's prices because ultimately they're still paying 5.5 to 6% at the moment, and it's still not profitable to hold them, right? They're not going to go through the hassle of a remortgage to hold on to a property that they're losing money on every month or not making money on every month. They're just not going to. It's the business side. It's the fact of the matter. This is what happens in the private sector. People are in the game to make a profit. It doesn't make them all terrible people. It's not necessarily the only incentive that they have. There were, and still are, tons of landlords who were stuck with a house in a way. Yes, it's a nice problem to have, but they moved, they split from a partner, they did this. This is exactly how I got into the game. An accidental landlord is what got me in. And then things have changed immeasurably since then, of course. But that's the cauldron that George was stirring, but of course he never really predicted the interest rate was going to do what it was going to do, and it's the interest rate that's done the damage really to the sector, because suddenly you've got people losing money every month. They've got to dump property, otherwise they're going to lose it. The only money they've got no cash flow or negative cash flow at these rates. Understand that, right? Or they're not doing maintenance, they're not doing compliance. They'll get caught in the end by the local authority, and the fines might be hundreds of thousands of pounds. Right, a lot of them don't even know about these because they haven't bought property since 2007 and they haven't stayed up to date with the ICR legislation and all the rest of the stuff that's come in since then. So they're sitting ducks really, whether they realise it or not. So what happens? Well, they sell, and a lot of that gets sold into the open market to an owner-occupier. And people who aren't particularly smart but particularly ideological say, "Yay, it's going to the owner-occupiers, and that's what we need to reverse the crowded out investment." Well, here's the reality. We're not even building enough units for the population growth that we're having, whether it be by migration or whether it be by organic childbirths, right? We're not even doing that, let alone how many extra houses we might need for rental, which some people estimate is up to 200,000 a year. Shelter have recently called for 90,000 a year. You can call for what you want, but you've got to have a plan in order to deliver it, and you've got to have a government that are willing to deliver that plan as well, ultimately. And there's some serious problems, apart from anything else, with the planning system that would need to be overhauled. And you're very unlikely to see that ever happen from a Conservative government. That's what history has told us. That's not me taking a political position. So where are we today from that £1 in every £3? We're £1 in every £14, right? So that's what's going to buy to let. So remember my arguments. That would be ultimately, 1 in every 7. One in every 14 houses. So we can probably say 1 in every 12, maybe, because rental units are still cheaper and we need cheaper stock to stack up. But 1 in every 12, that would be the replacement rate currently, best guess, in the buy-to-let sector. And we've still got 18-ish%, maybe a percent down, possibly 17, depends which figures you read. The figures aren't very good on this stuff, unfortunately, but fewer households are in the private rented sector now. Now, if that's because more households are in the owner-occupier sector, which is one of the reasons, that's got to be seen as a real positive. But my point is they've tried to control the size of the PRS and the growth of the PRS by turning this screw when the PRS does need, in a healthy way, to grow every year. As I say, some people say up to 200,000 units. How can you address that? Well, you can build more social housing, because there are people in the PRS who should absolutely be in social. They can be more supported accommodation. But think in the real world, what tends to happen these days especially is that units come out of the PRS to go into serviced accommodation, HMO, supported, temporary accommodation. You could name social housing. You could name a whole lot of other ones on leases to providers. That's not creating new units, right? It might be creating more appropriate units. And when you're HMOing, you are creating more units within a unit actually as it goes. But of course, with serviced accommodation, everyone who lives there by law, unless you want to give them a tenancy agreement without realising, has got another property somewhere in the UK or is potentially visiting the UK. They're not a permanent resident. So it takes it away from a permanent resident. So that's where we are. So 7% of money going into new buy-to-let units in terms of mortgage money, and 19% still in the PRS. That is the quantum of the problem, and that is really, really significant. So the interest rate has to be seen as the number one reason. It's quite literally the one that nobody controls. The 5-year gilt has been trading below the base rate by between 1% and 2% since base has been up to 5.25 from August last year. I've talked about the taxation disincentives, of course, but it really means things go through limited companies. But what you're seeing is in order to cope with the costs and the responsibilities of running companies, you see people band together. So in the old days, it might have been one person who perhaps wants to build a portfolio. Yes, of course, people partnered with each other. Not normally more than two partners. I don't think I've ever negotiated on a portfolio which is not in a company that has had more than two partners or directors. So that's the sort of the position of where that's been for the moment. What you see these days is 3 to 4 people, quite often, basically banding together, forming a limited company, putting some money in each, because that shares the bookkeeping, that shares the accountancy, that shares all the other costs of running the company, and it's the only way, or the efficient way of reinvesting. Because if you're earning at the 40 or 45% tax rate level, if you can instead pay the 25% corporation tax or lower, if it's your only company, you got your first 50k at 19%. And of course, if you're building a company, you're probably going to make losses or not much in terms of profits, not much in terms of taxable profits in the first few years or during your growth phase. It could go on for 20 years if you're Amazon. And it was an incredibly efficient way to do it, as you know. There's also now uncertainty around recovering possession. Renters reform bill's been in the Commons and now the Lords for so long with bits and bobs and backs and forths. It doesn't help. People know Section 21 is going because apart from anything else, you've got Labour who are polling well, who are shouting about the fact they're going to get rid of it anyway. So it either goes now or it goes very soon. But the longer it drags on, the more reasons there are to not like uncertainty. No investor likes uncertainty. I want to reiterate the point about the hostile environment because, of course, I'm borrowing this phrase from Theresa May and trying to put immigrants off by driving vans around saying go home and terrible things like that. But it's been a hostile environment for landlords. It's been very clear the government doesn't want individual property landlords anymore. And George Osborne and David Cameron were so obsessed with big business and trying to seduce it and court it and for whatever other reason. I did read the other day that 50% of all business investment in the UK is performed by 0.5% of multinationals. So that is scary, and it does give quite a bit of weight to Rachel Reeves' idea of trying to co-invest with these organisations because we desperately need that business investment for economic growth. It is a key part of our GDP. It isn't to the tune of the fact that the consumers should suffer from those results, which is often what does happen because you get what are called oligopolistic markets where you've got a few companies in control. They start to gouge prices. There's been accusations to the big house builders of operating like a cartel in the past few months, and it's something that we all know who are in the game anyway, really, whether it gets proven or not. It would be said, anecdotally by a number of people who've worked anywhere near any of the big four house builders. So we've also got inflation to think about, right? And that's been a factor because construction inflation, refurbishment inflation, maintenance inflation, well above the actual rate of inflation and well above the rate of rent inflation. What does that mean? It means margin squeezes at a time where the margins collapsed anyway because the cost of debt has gone up so much. So it's a problem in that specific sector. Now, we're seeing on the ground that's starting to ease. That's definitely started to ease a number of months ago, but we have got a vast skill shortage in this country. And if there is any mileage in Labour coming in, let's say they said they're going to build 1.5 million, let's say they have a real go at it and they build 1.2 million homes, that's going to suck up a lot of the trades that are out there, because it's a significant increase over what we have been delivering, and housing starts at the moment are absolutely at rock bottom because of the terrible situations and more regulation that means it costs more to build houses since June last year. About £8,000 a house extra in build costs is what I was told. So of course that has to go somewhere, and of course it can't go, the house builders are very, very good at selling property to first time buyers, but they're not completely bulletproof. And then, perverse incentives that exist are also worth a mention in this video. Double council tax on empty properties. What council wants to cut their revenue by trying to make sure the empty homes officer does their job? 3% stamp duty. It disincentivises flipping of property, refurbishment, stuff that the good old-fashioned homes under the hammer stuff. Of course it goes on, but it goes on less because that 3% again has got to come from somewhere, and tax it's not all coming out the pocket of the vendor. Tax doesn't tend to work like that. The vendor takes some of the hit, the purchaser takes some of the hit. Ergo, fewer deals stack up than they otherwise would do. So the pendulum has swung too far, but we're supposed to be happy about the fact that Lloyds Bank have built 2,000 build-to-rent units, which aren't really the sort of mix of units that we necessarily need. They might be. They've got a partnership with Barratt Homes, but new estates tend to be more likely to flood in less convenient locations with tighter plots and tighter roads, and they tend to be at extreme values. What do you think a corporate does when it looks at the rent? It goes to market next year, right? If rents are up 7% in 2024, on the 1st of January 2025, they'll put the rents up by 7%, maybe 7% plus CPI. Who knows? But that's what you're going to get. You don't get that from smaller individual landlords. What does that mean? Bad result for the tenant, ultimately. And I'm afraid I'm feeling pretty bearish about this whole situation for the country's sake and for the tenant's sake. Obviously, it means perfect storm conditions for investors and landlords. So I suppose we should all be happy about that. But I think in the real world, all we want is a normal functioning market that moves along at a steady rate. All we've had over the last 21 years is a housing market that's moved up by RPI, Retail Price Index, from 2003. Right, that's all we've had. We've had a million headlines about it's gone up, this has happened, that's happened, blah, blah, blah. And of course, localised areas of the country. Bristol, it won't be the case. That's just RPI, right, since then. But there will always be pockets that outperform, and Bristol, frankly, should have put a lot more effort in when they knew there'd be the population forecasts in Bristol are sort of 8 times the population growth of the rest of the UK. Quite phenomenal. No one's done anything about it. Bristol Mayor hasn't done anything about it. Just moaned about rents instead, which are an inevitable economic consequence of the supply and demand conditions. I mean, it's just a waste of time. But it's going to get worse before it gets better, I'm afraid. Even if Labour can come in and do some of the stuff that they said they're going to do and address some of this, if they get the way they address this wrong, so there'll be people in the Labour Party that will absolutely be committed for ideological reasons to making it worse for landlords than Conservatives did and faster. Right? How many of them, what percentage, we don't know. How does Angela Rayner feel? Well, now we know once she maybe was a landlord, and she certainly had some CGT problems, but she's a homeowner. So hopefully she understands some of this. But if Labour go after the landlords for the sake of going after the landlords, it's going to be even more problematic than it has been under the Conservatives. If they actually look at some of the evidence and try and make some sensible decisions and work out how to incentivise, they're not going to be incentivising the tiny property landlord. They want us to die out over the years. All governments do. They want to be able to measure it. Too many people don't pay the tax on rental property that they own. They don't want cash transactions. You know all of this stuff. But we have already seen they are going to sanction rent controls devolved to mayoral levels. And Sadiq Khan has said that there will be rent controls for 6,000 houses as a test. And we know what's going to happen in that test because we've got tons and tons of data about rent control. But will it put people off? Is he doing it to show people that it doesn't work? I don't think he is. He wants it to work and he thinks it's needed, and it's 6,000. So let's see what happens. And I think they're going to be new units anyway. I'm not sure. I don't live in London, so I haven't looked at that particularly closely, but I did hear him say it a number of times the last time I heard him interviewed. So you can check out the article on telegraph.co.uk, 160,000 rental properties disappear from the market as landlords sell up. And also come and find my post on LinkedIn, give it a few comments, give it a share. I've got some great comments on there as well. Lots of positive stuff about how that £1 in 14 going to buy to let makes a huge difference. There's a bit of chat around how the Bank of England and the ONS say that fewer rental properties are disappearing than the Telegraph say, but nobody is disputing the point that A, the number of rental units is going downwards, and nobody's really making the point that B, the number of rental units needs to go up, not down, and that's a big problem. That's a big problem. So some good feedback on there. Join, have a look at the post, leave me a comment, and if you don't already subscribe to this channel and you're watching this video, I'd be very appreciative if you would give it a subscribe. Thanks very much. Cheers.